Sudip Bandyopadhyay is also with us on the show. So Sudip, let's begin by discussing the IT space itself. What's the read-through from TCS and what should one do with their IT positions?
Well, I think, Anisha, I'll maintain my view, which I've been maintaining for quite some time. I think, a couple of more quarters we'll see pain in the IT stocks, particularly the frontline IT stocks. And we have to treat every IT company differently. They have different set of clients. They have different set of, specializations. So we have to focus on that. But overall, I think the message from TCS management interaction, I think, is very loud and clear. The managements are not confident about the future. I think that's one message I at least derived after listening to the TCS management. They are not confident about the next few quarters. Of course, long term and all that, they're positive, but next few quarters, they're uncertain. So under the circumstances, I think it is better to wait and watch rather than jump into large cap IT. Of course, we'll have to listen to what Infosys and HCL Tech, and by end of today, I think we will know which direction generally the IT companies are moving as of now. But again, I'll highlight that there are companies, small companies and mid-cap companies in IT sector which are focused on specific segments of industry. Let's say travel and tourism, and I have mentioned this earlier. Companies catering to travel and tourism, there is a boom there. And because of that, those IT companies will do well. Look at a company like RateGain Technologies. They've been doing phenomenally well and will continue to do well. Look at Coforge. They will continue to do well. Look at companies which are catering to automobile industry. Now, there is a kind of a major activity going on, a transition from IC to EV. And that transition is being facilitated by a lot of IT companies. So a persistent system, is in a different space altogether. So we should look at these IT companies at this stage, not the generic IT companies, because they have challenges in US and particularly North America and Europe.
Okay, that's the take coming in on which way IT may be actually headed as a part.
This one, Sudip, I beg your pardon, comment on this one, Zomato. Could it really rally 50% from here?
Well, I don't subscribe to that view, and I'll be cautious. As you rightly said, it has already moved up quite a bit. There are some headwinds, and I understand that the competitor is undergoing some challenges in Mumbai city in particular with staff under some kind of a strike. So there are headwinds. Of course, the festive season and ongoing World Cup provides an incremental opportunity for Zomato and competitors as far as their food delivery business is concerned. But having said that, I think as far as the share price is concerned, 50% upside from current levels looks a bit stretched, and I would advise a bit of caution here, definitely.
But Sudip, I guess, given the elevated levels still in the market, the scope for disappointment is higher, right? Wherever, the earnings will not match up to expectations. Just wanted to understand as a color, considering today we officially kickstarted the earnings, or yesterday rather, with TCS. Where do you think there's scope for big disappointment and a big surprise, if at all?
Well, the surprise or the good bunch of results should come from the BFSI pack. I think there has been a confluence of positive factors as far as BFSI is concerned, and that continues. So I would be probably happy to see the numbers coming out of the BFSI pack. I believe that the specialty chemicals pack will be the ones where we will see negative surprises. The pain in the specialty chemical industry isn't yet over. Probably it will continue for a few more quarters. And this used to be a market darling sector, but unfortunately the performance hasn't been. And the factors again here are still negative. So the challenges in China, the competition coming from Chinese producers, and the low demand of the output in Europe and US is plaguing these companies. So this is where we will see. By and large, other sectors, including cement, will be as per expectations. That's what I believe.
So Much for putting that into perspective as to where the disappointment and surprise could be in the quarter, which is just, of course, underway now. The earnings, that stock too is high by 4.5%. Sudeep, time and again, we have been hearing about the increase in the demat account or the SIP crossing 16,000. But if you look at the overall penetration level of the people having exposure to stock market is still quite low. To play this theme of entire financialization, which names come to mind? Add to that a K Fintech, Angel One, and rest of the names as well. Any top recommendations?
Well, I think some of the market infrastructure companies should be looked at definitely. I think these are fundamental to running the markets, and they are also showing a lot of improved profitability and growth. So you're talking about CDSL. I think it's a good bet, but it's now probably at an elevated level. So I don't think I will recommend CDSL. One can definitely look at MCX. The transition to the new platform, which is happening, I think, next week, should take them to a different level. Also, the new launch of new products and services should help MCX. It has suffered in the past, and now I think its time has come. And I think MCX can definitely be looked at. As far as the the direct service providers like an Angel One and other listed players, they are good companies. They're doing well, but the fact remains that they've already moved up quite a bit. And at current levels, I think getting into these stocks may not be recommended.
Right. Okay.